Hi guys, welcome back to Financial Markets. Hope you're all doing well. So naturally, we've had a really turbulent last couple of weeks in the equity market. Obviously, there has been a rise in the number of cases around the world with this coronavirus, and so naturally, it has affected the financial markets quite rapidly, actually, which is quite strange in the sense that we were aware of this since early Jan, but there was nothing really priced in at that point. And in fact, we had an uproar even then, a constant grind up, even towards, early part of Feb, when cases did start to go more worldwide. And so it's quite interesting that, when it did escalate, I guess, to more Western countries, it kind of turbulated the whole scene. But naturally, if I'm sure a lot of people out there have lost their shirts, and people have. Some funds have made money. I'm talking about hedge funds. Some hedge funds have actually made good money out of it because they were predominantly in bonds or in gold and precious metals. But naturally, it's been a difficult time for most people to navigate around this. And so I thought I could, make this video to give you guys a bit more of an insight into what I'm thinking and what is it that you could potentially do to sort of survive and, at least withstand this turbulent times to allow yourself to come back and make some money when things start to get a bit more quieter. So I think the first thing to note is that the equity market is now down about over 12%. I think it's not at 15% yet. We're about 12.3. Which is, if you think about it, it hasn't fallen that much. If you just go back to 2018 Q4, we had a turbulent time of about 20%. So if we check here, so we had a fall of about 20%, and this was when the Federal Reserve was basically came out and started raising rates. And so because we've been in such a low rate environment for so long, a lot of people had that little panic scare. The people especially that have borrowed a lot of money, and then they decided, well, okay, this is our time where we need to start deleveraging again because interest rates are going up. And so people started selling off their, I guess, positions out of stock market, and which is why we had a collapse of about 20% over here. So if you take that into comparison in terms of corrections that have happened in the market, at least in the last 5 years, it's not that much. It's just that this one has been more severe. We've had a drop in about a week, literally in a week. So we went from 19th of Feb to 28th. So in about 10 days, we had a drop of about 15%, and that's what's been the biggest problem rather than the drop itself. And so now people are wondering, well, could this be the end of the big bull run that we've had in the last decade, and could this be the tipping point for a recession? Now, before we get ahead of ourselves and start thinking about that, let's understand what's gone on. So we know that the coronavirus has now expanded to more Western countries. We know the cases are exponentially increasing. The number of deaths have started to now increase. I think Italy reported just today that the deaths have escalated to 200 quite quickly. So I think the biggest scare that people should wonder or think about, the number of cases, i.e. being infected, they could be a bit wishy-washy, but deaths are hard to hide. So deaths are usually more accurate numbers being reported than the ones that are being infected. So that way you can't really use that as and then work out the mortality rate, because a lot of people are working out mortality rate by, oh, this is how many deaths have happened and this is how much we think of people are infected. But reality is you don't really know how many people have been affected, because it's just too difficult to know and report because of the way it's global data that you're trying to get gathered off, and about you don't know more about each country and the way they are monitoring that. And so it keeps things a little bit more difficult. And what's interesting to note, the equity market has fallen about 12%, which, like I said, we've seen before. But if you look at the VIX, the spot VIX is trading at 41. And if you go back in time, it is pretty much the second highest level we've had since 2008 financial crisis, which if you think about is insane. It's completely crazy how the VIX has exploded out of nowhere, even though the equity market hasn't fallen that much, as I mentioned, in comparison to what we've had in the last decade. But this is the reason for this is because we have been in such a low interest rate environment, and we've had central banks in pushing money through the system, that all hedge funds and funds in general have been selling off the VIX. And so what's happened is when the VIX started spiking, it's something called a short squeeze. If you need me to explain this, I can explain another video, just comment down below. But this has been a short squeeze. So what's actually happened is the people that were selling VIX volatility, because they knew that volatility was gone and dead because of Federal Reserve and all the ECB and all the banks pushing money through the system, that when the VIX started to move on to the upside, what happens is people that are selling off the position that were short are now having to buy back at these higher levels, and that pushes the buying even further, and that just elevates the VIX to new levels. And so what's interesting to know as a trader or as an investor, that a way to play this could potentially be, if you believe that you don't know how the market is going to react and turn, but what you could do is you could then go in and potentially get a small short position. You will always go small because VIX is very volatile. Get a small short position in the VIX, and conversely you could go and short the equity market, because the point is, if the equity market roars up to the upside, the VIX tumbles, so you have that inverse correlation. And so if I show you, I think if I can get the chart a bit better, I don't know if we could add we can overlay the main chart. I'll just give you an example how that means exactly. So if you look carefully, the VIX works pretty much conversely to the equity market. So the equity market is this light blue line. See, as you see, as it tumbled in 2018 December, we had a spike in the volatility. And naturally, when we had an uproar in the equity market, which was this period here, we've now had a slump in the VIX. And so it works conversely with each other. And so what people can do as a trade, and which people do as a trade, as sort of an RV relative value trade, because you feel the VIX has gone far ahead, but the equity market could actually go a bit more further, because like I said, we've had bigger corrections. The way to potentially play it is you could get a small position in the VIX as a short position, and you could conversely also go short the equity market. So when the VIX goes down, you'll be make money on the VIX. Conversely, the equity market will go up and you'll lose money on the equities, but net you would help to balance out the positions, and rather being a more one-way directional bet. So I guess the point I'm trying to make is, because we're not healthcare professionals here, and nobody really knows how far this could go, the best way to get over this period is to actually actively manage your book and manage the risk in how you trade. And so a lot of RV relative value pair trading is a lot more important at this stage. And naturally, another big play that I've been pitching for I think a year now, I'll actually link that on the top right or in the description. I've been pitching silver for such a long time, and as you can see now with silver, I think I've pitched it at around $14, but you can go back and check when I actually pitched it, and I believe it was at $14, and now we're at 17. And so as you can see, because of so let's just go for the sake of saying at 15, even though I believe I did it a lot lower than that. There's been a 15% gain, and so that's the period of which you could allow yourself to have some defensive positions within the book, and that can be done through going into precious metals, through gold, silver. Another trade I've been watching, actually, because a lot of people plow money into gold and silver. Well, a lot of people put money into gold, which is why I put silver as one of my trades like last year. But now, because silver is getting the traction, what I'm starting to now think about is going to platinum, which is another precious. Well, it's more industrial, but it's also a bit precious, you could argue. And so I'm getting a bit more position into platinum. As you can see, it's quite distressed levels, and so you can get good pricing on it now. And the reason why I decide to go back, like in the supply chain, is because of the fact that everybody will go into the front end, and so you lose your edge as a trader into trying to find a good opportunity of something that will rally and make you money. And because everyone's gone into gold, so if you look at gold in comparison, you've had a massive rally in gold in comparison to other metals. So as you can see here, we had a massive rally from here all the way up there, whereas from here we've pretty much stayed at the same level now. And so that gives you an opportunity to play a trade where you could say, okay, we'll get some precious metals in the book. I can do that by going into a metal that's not been that exposed yet by Bloomberg, by CNBC, and so you can play that trade a bit more smarter. And so those are the positions I've been looking at. So yeah, so stay safe out there, guys. It is getting tough. Don't try to catch a falling knife and just buy equities and sit on it and wait. Sure, this could fade away, but as a trader, you want to play it with nice risk management and buy some defensive materials, some defensive stuff in your book. And that's the best way to get past this stage. And then we'll see, once the coronavirus dies down, what is the next stage in the trading process. So I hope you guys enjoyed this video. Please subscribe, like, and comment, and I'll see you guys in the next one. Bye.